Look, we have to start off by understanding that we have the worst demand shock since the financial crisis when it comes to energy. And also, apparently, as of this weekend and certainly overnight, the news from Saudi Arabia and from Russia suggests we're going to have the biggest positive supply shock since 2014, 2015. So we have a lot of barrels and no demand for them. And again, for us, this means that oil, it's going to drop into the, probably it's going to stay in the 30s for sure, but it's going to drop into potentially the 20s over the course of the next couple of weeks until we find some kind of agreement between Russia and Saudi Arabia, or the U.S. shale sector capitulates and starts reducing operations pretty fast here. One of the two's got to give here.
Tom, do the Saudis have the ammunition in the short term to maintain 30 or below 30 price levels for how long?
Well, I
well,
think
they have
for
about...
the next...
Oh, go ahead, Tom.
I'm sorry. I think for the next 2 months, you know, anything goes. I agree with Francisco. We're seeing a demand shock, which probably on some days in the quarter or in the next quarter could be 4 million barrels a day. And there's so much uncertainty about the virus and whether or not social distancing spreads in this country that when you were talking about a stimulus before, you'd have to sort of give the stimulus in terms of airline tickets or cruise tickets. And on the Saudi side and the Russian side, this is a catfight between two of the three largest producers in the world. Now, there's been some talk of a rapprochement between the two, but that's not likely before April. So we're shaping up to see a March, April, and perhaps early May like we've never seen before. We think that the range of prices for Brent over the next 8, 9, 10 months is as low as $20 and as high as $50 toward the end of the year. But that's probably a little bit of blue sky tint at the end of the year.
So, Francisco, how do you think about what the shale industry in this country will look like?
Well, look, I think the big question is whether this is, as Tom pointed out, a catfight between Russia and Saudi, or actually they're teaming up to go after the shale industry. Remember, neither Saudi nor Russia have actually lost market share in the last 4 or 5 years. The members of OPEC Plus that have lost market share include Iran, Venezuela, Nigeria, Libya. So we don't quite really know if Saudi Arabia is saying, hey, we don't care if we get 10 million barrels a day at $60 a barrel, or we get 15 million barrels a day at $40 a barrel. We're going to be just fine. But if it's going to be 15 million barrels a day, we got to go after the shale industry, and we got to take that U.S. market share away. So if that is the case, if this is what's going on in the background, I think the U.S. shale industry is gonna take a big hit, and we'll see a lot of the weaker hands leaving the market, and we'll see big consolidation with the major players becoming bigger, and the stronger balance sheet surviving here. That's going to be the story over the next 3 months.